Hi there, welcome to Kneppy Invests. It is the 1st of October, and that means it is time to give an update to the performance of three portfolios, including the group portfolio that we did set up just before the start of the financial year. So this is actually the first quarter performance of these three portfolios. And to be honest with you, we need to be thrilled, and I need to be thrilled with the performance of the group portfolio and my own long-term buy and hold portfolio. So let's get stuck into it. But before we look at the performance of these portfolios, just a few updates in regards to Kneppy Invests. At this point in time, personally, I am being quite not as active as I could be. In fact, I'm fairly bearish about the overall markets right now. And when I'm bearish, I do resist buying any companies. The last time I did buy a company was Hansen Technologies. I think that was the 7th of September. I'm not even thinking about buying any companies. I do have a watch list with a group of companies that I am thinking about buying in the future. But we are looking, or the markets are looking fairly bearish right now. In fact, as I do this video at about 11 a.m. on the 1st of October, markets have been open for an hour, and right now they are down 1.7%. Yesterday, we did see the markets up about 1.9%, and that's because we had two big down days before that. So a lot of volatility in the market. We're seeing days where the market's down between 1.5 and 2%. One day where the market is up almost 2%, and now we've seen the market down a fair bit. A lot of possibilities why we're seeing overall negativity in the markets. I do think that overall the markets are quite toppish, overvalued. I think there's little doubt about that. If you look at some valuations of some of the companies out there, and there is a lot of potential problems in the future that could drive the markets down. And when we do look at the charts, and I'll show you the chart for the XGO in this slide, it does look like the uptrend we have been in since about November or October last year, so for almost 1 year, has come to an end, possibly. I'm still thinking about getting into Facebook, podcasts, and Patreon. Those are all in the pipeline still. I am taking my time. I'm just waiting for my subscriber base to rise a little bit higher before I even do those things. I'm not sure which one I'll get into first. Maybe podcast and then into Patreon. Facebook could be the last one. Maybe even do, what's the other one? There's Facebook, Instagram, TikTok. Who knows? I'm not a big fan of TikTok, but you never know. Types of videos I'll be doing in the future. I really like doing buy, hold, and sell videos. Whenever companies release a profit upgrade, I really want to focus on those companies and those announcements. I have already set one up to do a video in regards to Gentrack, who issued a profit upgrade on the last day of September. Share price went up about 25%. And I'm also going to be doing videos on market updates, looking at the XGO, how that's been performing, that sort of thing. So if you have any ideas about the type of videos you'd like to see me do, leave it in the comment section of this video. Before we have a look at the updated XGO chart to the end of September 30, just want to go back to what it looked like last time I did this video, a portfolio performance video, which would have been towards the end of August or the start of September. And on August the 31st, the XGO closed at 7,504.5, which was up 1.51% for the month. And that was, or meant, the XGO was up 11 months in a row, which is either an all-time record or very close to be an all-time record for consecutive days or consecutive months that the market has been up. In fact, we have seen the market was in a well-defined uptrend ever since November last year. You could even say ever since the market lows during the depths of the COVID-19 financial panic, when the XGO got to a low of 4,400. And we have a very positive, bullish-looking chart here. Things have definitely changed in the past month, however. So let's have a look at the most recent, or the updated XGO to the end of September 30. That run of consecutive months in the green has come to an end. September XGO was down 2.3%. It could have been down even more, but to the final day of trading on September 30, the market was up almost 2%. So we could have seen the XJO down about 4%. And in fact, trading today on October 1st, even though we've only seen 1 hour trading from when I'm doing this video, the gains we saw on September 30 might have already been erased. But when you look at the chart, things have turned around from being bullish to bearish. In fact, instead of the XJO being above the long-term moving average, which would be the 50-day moving average, we have seen the XJO move below the moving average. Not only that, we have seen the shorter-term moving averages move below the long-term moving average. And that is a sign that the market has turned around. It's becoming more bearish, and there is a potential we might see the XJO go down further from here. Now, there's a lot of other factors at play here, particularly because we do or are affected by what happens on the international exchanges. But there are a lot of potential factors at play in regards to China, future interest rates, inflation, all those sort of things are at play over the next few months that could drive our markets down. Have heard some experts being a little bit bullish because all these lockdowns will come to an end, and they believe we're going to see a real big uptick in retail. I don't think we're going to see quite such exuberance like we saw last year in regards to people going out and buying stuff. I think it's going to be much more muted this time around. And in fact, they've already talked about opening up the borders soon for Australians who are vaccinated, I think makes sense. And that means there is a chance that instead of people spending the money here, they're going to go overseas and spending money there. So I think if we do go back to normal, and if you remember back before COVID-19, the retail sector was really sluggish. It was not a sector you'd want to buy into. So more than likely, we're going to go back to that where the retail sector will become sluggish again. And we have seen some retail companies under pressure. And that's for good reason, because we've seen some retail companies' share prices significantly higher than they were before COVID-19. So I do think the retail sector is one sector I will be a bit nervous about holding in the future. But overall, much more bearish right now than I was at the end of August, because the chart is telling me that there is potential we might be seeing the XJO moving into at least a medium-term downtrend. Now to the performance of the three portfolios, starting with the group portfolio here. And I do have to say the group portfolio performed stellarly in August. In fact, it was up about 2% for the month. Overall, the market was down 2%. And the group portfolio was up 2%, mostly driven by Novonix. That is up 200% since July the 1st. Profit of $7,982. Market value of Novonix, $11,983. So it's increased from $2.22 to $6.65. Personally, if I was owning Novonix, I'd be a little bit nervous because the market cap of Novonix is almost $3 billion. I do think there's a little bit too much hype in that company right now. They do have to perform stellarly over the next few years to really justify that sort of valuation. Lake Resources up 83.6%, Arctis up 48.9%. A lot of other companies up a little bit, between 10 and 20%, and between 0 and 10%. Worst performing company, not a surprise that it's Fortescue, down 35.9%. They did issue a fairly big dividend as well, but we have seen iron ore prices under significant pressure, and the third worst performing company is BHP, another iron ore producing company, a little bit more diversified than Fortescue. Also seen BrainChip down almost 20%, Aeris Resources down 15%, Alcidion down 11%, and Dusk down 13%, and that's one of the retailers that have seen their share price under pressure. I think, if I remember correctly, Dusk's mentioned that like-for-like sales for the first few months of the financial year 22 was down about 10%. That's why you will see some retail companies under a little bit of pressure right now. The other thing you have to take into account, we have seen a fair few dividends come through. So dividends of $975. You add that to the capital gains, and the group portfolio has performed quite well. And we'll have to look at the overall performance for the group portfolio at the end of this video. Onto my personal portfolio, starting with the short-term sentiment, looking at the chart and just looking at the sentiment in regards to buying and selling. haven't been really active in this portfolio for a while, and for the month made no disposals, no purchases. I have been adding cash in terms of disposing companies over the past 3 months. Even though I was bullish at the end of August about the overall markets, the more the markets rose, the more long or medium-term bearish I'd be, because I was thinking the overall markets were a little bit expensive at that point in time. So I wanted to increase the cash on hand in this portfolio to take advantage of any correction we might be seeing in the future. So at this point in time, I have $24,500 of cash to deploy if we do see a major correction. In fact, I could be even a little bit more active in disposing. There's a few companies here I've been thinking about selling. Best performing companies in the past 3 months: South 32 up 20.5%, John Lynn Group up 20%, Select Harvest up 22.3%. I have been thinking about selling that, even though the share price has been rising, because if you look at the share price, it's at a long-term high or near a long-term high, simply because armor prices have been higher recently than they have been in the last few years. And Atomos up 28.8%. I am actually quite bullish on that company over the long term. I do think the run rate for growth for that company is quite strong for the next 5 years. On to my personal long-term portfolio, which has performed quite well in the past 3 months. I did take some profits in August. I think those profits was Aussie Broadband, which might have been a mistake, and Alexium, which definitely was not a mistake, because the share price for Alexium went down from about 9.5 cents to a current share price of 7.1 cents. Aussie Broadband has just kept on rising. So that could have been a mistake. And I was thinking about holding Aussie Broadband for the long term, but just the profit taking took hold. Now, sometimes the saying that you never go broke by taking profits doesn't always play out, even though it's true, but you don't become wealthy by always taking profits. Best performing companies since July have been Clinuvel up 46%, EnviroSuite up 89%, Revison up 63%, Ambertech up 40%. A lot of companies have done fairly well, not as good as Novonix in the group portfolio, but we have a broader group of companies here that have performed quite well, above 10%. On the low side, worst performing companies: Electro Optics down 20%, OEC, which is Orbital, down 22%, EOL down 16.8%, and BrainChip down 19%. Again, no disposals or acquisitions for the month, because this is, or I am fully invested in this portfolio. Cash on hand, it's $94, because we did or have received $892 of dividends during the last 3 months. Whenever I make purchases for the long term, they have to be put into my spare list of companies that I actually do own. So all the companies in that personal long-term portfolio are companies I actually do own. Unfortunately, the amount of companies I do own in that portfolio are significantly higher than $100,000. So I have to have this spare portfolio, which has performed quite well. And included in this portfolio, we have PWR, which was or is the best performing company out of this list, Kogan, Nitro, and Serata, Appen, which has not performed very well at all, Hum, Catapult, Image Resources, Mitchell Services, and my most recent purchase, which was on the 7th of September, Hansen. And here is the performance of all our portfolios, their quarterly updates or quarterly performance. The STW, which is the ASX 3 or 200, up 1.82% for the quarter. My short-term sentiment portfolio up 2.12%. I would prefer that portfolio to be double the overall market. So that's underperforming what I'd like, but the group portfolio is up 11.16%, so significantly higher than the overall markets. In fact, that's 5 times, or actually almost 6 times the performance of the overall market. And personally, I'm very happy because my long-term buy and hold portfolio is up 11.61% for the quarter. So that's significantly higher than my expectations and my goal. So my goal is for my portfolios to double the overall market, And again, that's 6 times the overall returns for the market. The group portfolio and the long-term buy and hold portfolio, those returns also include dividends. You always have to include dividends when you're looking at the overall returns for a portfolio compared to the market. Now, the STW does include dividends as well, so it's taken into account dividends. So overall, we have to be very happy with the performance of the group portfolios, and I have to be quite happy with the performance of my long-term buy and hold. And I do think I may have to pay a little bit more attention to my short-term sentiment. In the past few months, I've actually neglected that portfolio. I haven't really been looking at charts, looking at for changes in trends, that sort of thing. So I think my goal over the next few months is to pay a little bit more attention to short-term sentiment. That is all I have for this September 2021 performance update of the group portfolio and my 2 own personal portfolios. This is also the quarterly update. If you have any questions about what am I doing or any other questions about companies that are in my own personal portfolio or the group portfolio, I'd love to hear your opinion, your thoughts, your questions. So leave it in the comment section of this video. Otherwise, I'm not a financial advisor, so even though we are doing very well, the group portfolio and my own personal portfolios, this does not mean it's going to continue in the future. This is only a 3-month short period of time where we have simply done much better than the overall market. So I'm not a professional advisor. If you do need professional advice, make sure you seek out someone who is qualified and can speak to your own professional needs, not professional needs, your own financial needs. That's it for this video. Have a good day. Speak to you later. Bye.